Hello traders, Gary Wagner here, approximately 12 noon, Tuesday, the 22nd day of November, and this is the daily report for gold and silver. We do have our precious metals markets higher across the board, roughly trading 1700 on gold right now, 1699, 1700 bid-ask spread. That's putting it up about $22 on the day, 1.31% higher. Silver, very, very nice showing today, up about $1.10. As you can see, 32.74, 32.84. That's your bid-ask spread, and that's putting it up almost 4%, 3.48% higher. Platinum is higher, and palladium is higher. Interesting activity in the stock market. That market is under a little bit of pressure with the S&P slightly lower and dollar index slightly lower. I want to start today by looking at our daily chart in gold. Traders, we are looking at a daily chart of the cash gold market. We will begin to look at that along with the COMEX futures. And the one thing that I find interesting, we did have a very strong higher day today, up about $20 as you can see. And when you look at the fundamental news out there, the interesting thing is what I'm reading is a recap of yesterday's news, but at the same time, this time having a bullish influence on the marketplace. Now, this is according to Bloomberg. Gold futures rose the most in a week after mounting debt woes in the U.S. and Europe spurred demand for the metal as a store of value. Silver surged the most in 4 months. Now, yesterday, we spoke about the fact that we had concerns over the European Union debt. We've had concerns for quite some time. At the same time, I talked about the fact that the Super Committee was unable to reach an agreement, and that, to me, in the long run, would be bullish on the precious metal. Both of them were cited as a flight to quality or a flight to the dollar, and that brought gold down about $40. It's interesting that a day later, the same news is cited with the exact opposite effect. Traders, that is why I am a market technician primarily. I listen to the news. The news is what moves the markets, but the interpretation of the news can be so different, so diverse, so opposing from day to day that I find that the technicals are the one thing that allow me to have some sort of clarity in the market. Now, with that in mind, I want to take a look at a couple of things today. The first thing is, where might we find support in this market? As you can see on this daily chart, I have simply drawn a Fibonacci retracement from this last decline, which was our record top up here, call it 1920, 1980, down to 1533 intraday. When we look at it, we see different price targets, and you can see that the market, at least tentatively, has found support right around, not at, but around 1680. 1680 is a 61% retracement of that last move, and it does appear as though we have found some support in the market. This, of course, is today's activity. This is aftermarket or the afternoon session as I look at it. Now, the interesting thing in this market is we talked about the fact that we are probably witnessing a continuation of a correction, and that the ABC correction that we saw, and if I can go over that with you, when we reached the top, this was the top of 5 right in here, but we had an unorthodox top. We had A, we had B, and then we had our C wave. Now, the question that I have been really raising in my mind is this the entire, or is this the major ABC, or there is another way to look at it? And that is that we could say that this entire move here was A, and then this entire move here was B, and therefore we are now in a major C. And that's really the question that we have been tackling with. And as I said, for that to transpire and for us to gain some sort of certainty, what we need to realize is that in a typical move in a market where you have a correction, meaning your B correction, your B correction is going to typically be anywhere between 50 and 75% that of the move that you saw in A. So that when we look at the marketplace itself, and I have just simply put up that retracement band 50, this is 76, what that tells us, what that is trying to explain to us is that as this market corrected from this record top all the way down, this particular wave, a B wave, would simply move and would go anywhere between this band right in here, 75% and 50%. As you can see, there is no question of a doubt, this market fell right within the parameters of a classic B wave, so that it does appear as though we are still within a correction. That correction itself has now transponded so that we are now in our C wave, and that's this wave here. Now, how can that wave actually unfold? Well, it can unfold in a number of different ways, and I wanted to spend a couple of moments going over those with you today, very, very briefly, but we'll do it in more detail throughout. Well, we only have till tomorrow because we have the holidays coming up and then next week. But here's what we're talking about. The first of the three different spots it can move to is simply called a truncated. Now, on a truncated, you would have your marketplace as it came down. This is our C wave, and our C wave would be terminated above the bottom of A. This being the bottom of A, this being the top of B here. And so a truncated could terminate at any point really in between these 2 points. That's your first choice. The second type of correction that you get is simply called a flat, and that is one in which your C wave will be equal to the A wave. And then the third type is simply known as a standard zigzag. On a standard zigzag, of course, your C wave would actually trade below that of the termination of your A wave. So that would go to a new low, and that low would be below here. Now, as you know, I am a gold bull, and as a gold bull, my sense is that we'll probably witness a truncated C wave of sorts, but we have to see where the market falls and what the market wants to do. My sentiment is that there is so much fundamental data that should push this market higher. Regardless of the ebbs and flows, the peaks and valleys of this market, I see this market going to new highs, whether it's the end of this year or the beginning of next year. I see over $1,900 gold. I see over $2,000 gold. Traders, we are looking at our daily chart. This daily chart, of course, is in the silver market itself. And as you can see, we have found some potential support in this market. This is the 76% retracement. And when I talk about this retracement here, it is a retracement from this tremendous move back in February all the way up to the new record high. It's really the second of the record high because we did exceed this back when the Hunt brothers were involved in the silver market years upon years ago. But for at least the last decade, we're looking at, of course, a new record high. When the marketplace came down again, we have two different sets of Fibonacci retracements, one from here and here, and one from this move from 44 down. And you can see that it went past the 61% of the more shallow of the retracements, but it has found some very, very strong support just above here and really just at this 76%, which is, as you can see, 31.51. You can see that all these closes are well above that. Traders that are accumulating silver and looking at it, what would I recommend? Well, I would recommend that if you're going to trade it, you have stops below this 30.23, and if this support holds, you look at a target of around 35. We are still flat in the market, will remain so through the holidays, and take a look at it next week after Thanksgiving holidays. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.